What's going on, everyone? Today we're going to be talking about the Git protocol and the Git token. So we're going to be talking about the fundamentals and also comparing the market cap right now to market caps that are in the same industry, in the ticketing industry. So yeah, like I said, we're going to be talking about what it is, the fundamentals, and of course this is a speculative low cap token. This is actually ranked at the 726 spot when we're taking a look at the total market cap. So this is, I would say, a speculative project. So today we're going to be talking about it, a little bit about it and the fundamentals, and also where the price could go. So let's get into it. So with all the recent hype around NFTs in the past year, they haven't really been getting a lot of great hype. I mean, there's lots of scams, there's lots of replications, and in a lot of cases, a lot of people just think that NFTs are simply a JPEG on the blockchain. And Git protocol is going to change this awareness. So Git protocol is actually a blockchain ticketing solution. The ticketing business itself is currently between $50 and $65 billion, and it's expected to grow towards $80 billion by 2025. The secondary market right now is currently around $15 billion, and it's forecasted to grow to $25 billion by 2025. Git protocol is working on becoming the open standard to NFT ticketing, like WordPress is for websites. So integrators and events can actually use the protocol to use Git and actually use this to fuel events. The used Git is then sent to the DAO treasury, and once the DAO is fully operational, the Git holders will decide what happens, and this could be either staking or they could even continue to burn it. It's really just up to them at that point. Therefore, the Git price is directly linked to ticket sale volumes, and considering the growth that is expected in the industry, this is really a bullish case. Therefore, the Git price is actually directly linked to the sale of ticketing volumes, and given that the pandemic is slowly, starting to wane off and a lot more people are starting to go out more and go to more events, this is really more of a bullish case for the Git protocol, because now a lot more events are starting and a lot more people want to go out again and go to concerts or different various events that require a ticket. And in this case, this would be extremely bullish for the Git protocol. So the Git protocol is mostly used by artists and also ticketeers that want to prevent scalping. It works in the background and is so well integrated that the ticket holders don't even know that crypto is involved. To me, this is actually a really bullish case, because in a lot of cases, crypto is extremely complicated to the average Joe. So in this case, Git protocol actually already integrates crypto into the ticket itself, and most people don't even know that this is happening in the background. And really all that's needed to use it is actually just simply a mobile phone. And there's already a working product that's already in use. Git has sold over 600,000 tickets so far, and not one has been scalped. And to prove that the protocol works, Git launched their own ticketeer, Guts, several years ago, and Guts is operated primarily in Get's native Netherlands. So Gits is now actually onboarding white label clients that can integrate the protocol into their own companies. Flocky, who will be doing the Eurovision, was actually just announced, and there's also other big clients that also include TechTix, a German sports ticketing company that actually sells 2 million tickets per year, Get Ticket, which is a South Korean company with K-pop deals, and also Wicked, an Italian company known for ticketing the 300,000 strong Milano Wine Festival. So there's a bunch of other different companies that want to start using this because they want to prevent scalping and fraud when it comes to ticketing. And Git is actually also deflationary. For every ticket issued, 34 cents worth of Git is actually burned, and there's going to be no new tokens that will ever be created. So I think it's pretty safe to assume that, ticket sales are going to start continuing upward, and as more people and companies start using the Git protocol, more Git is actually going to be burned. And considering that there is only X amount that's ever going to be created, and considering that there's going to be a large amount of tickets that are going to be sold, i.e. therefore the supply and demand, I think the price of Git is actually going to go up a lot. Git will also move to a decentralized governance model where token holders will be able to make changes to determine the future of the protocol. And what I think is pretty crazy actually is that there are only around 5,000 wallets who hold 5 Git or more. So let's talk about competition. I know some people might be thinking, okay, what if there's competition? What if there is a better, faster, more secure, and also more used service? Well, there's actually not, and the only one that I can actually find is Yellowheart, and this seems to at least have a mobile app with no downloads or ratings, but their ticketing technology is very opaque and it really just looks like a worse version of Git. So right now, one Git token is trading at $2.20, and actually it's coming down a lot, given that it had an all-time high market cap as of around, let's see here, $101 million for an all-time high. And if we're taking a look at the all-time high price, it was around $8 to $10 here. And what I think is actually pretty crazy is that given the pandemic and everything that happened, with, ticket events and all of that pretty much ceasing to exist for some time, the price of Get actually continued to go up, and actually it has pretty much found a floor at around $1.30 to around $1.67. It's pretty much found a floor right there, and it looks like there is a lot of support at that line. So let's keep going here. I found a really cool blog that was talking about this guy's due diligence when it comes to the Get protocol, which I'm going to link all of my research down below. And what I also thought was pretty interesting was that he actually took the market cap of Get and he compared it to other companies in the ticketing space. And he compared the price even with that. So I'm going to show you guys that in a second. So let's take a look at this article. So over 1.3 million tickets have already been sold using the protocol since it was founded in 2017, and new ticketing companies have been added recently in Germany, Italy, and South Korea. Get is a protocol that can be implemented by both current and new ticketing companies in order to upgrade their ticketing infrastructure by issuing blockchain tickets, increasing transparency, reducing ticket fraud, reducing insane secondary market ticket sales, and unlocking the benefits of truly digital NFT blockchain ticketing. So when we're taking a look at the tokenomics, it's a relatively low total supply of 23 million Get. It has a relatively low market cap, and also 7 million Get right now, which is 31% of the supply, is still within the protocol's own wallet, excluding anyone's personal wallets, meaning that there is a relatively high element of trust involved. High supply burn tokens of 10 million Get, nearly 30% of the initial total supply, meaning less of Get, which is favorable for the holders of Get. Further on-chain analysis shows that the top 10 wallets, excluding exchanges and protocol wallets and contracts of Get, own close to 4 million Get, which is 17% of the total supply. And for comparison, the top 10 Dogecoin wallets own 43.5%, while the top 10 Bitcoin wallets own 6.19% of the total supply. And this point is pretty much solidifying that there is not going to be a rug pull, or that someone could easily, manipulate the price. So when it comes to the roadmap for the Get protocol, there's going to be a couple of different points that are pretty important to talk about. So protocol owned liquidity. Liquidity for the protocol should be considered to be a fundamental part of the system and not just an external benefit for the token. It would never be an acceptable thing to turn away an aggregator because there wasn't enough liquidity for them to invest for the protocol, or too much slippage to make fueling the events impractical. The permanent and most practical solution for this is to have a protocol own its own liquidity, and that would be instantly deployable to where the system requires it, and always available to the market. Additionally, this will be a source of the revenue for the Get protocol due to the trading fees. And then there's event financing. Event financing is best explained as pre-selling NFT tickets for events in order to collect enough resource to fund the actual event, therefore giving users the ability to fund their artists' events and giving artists the ability to use their community for funding events, eventually decentralizing the event and funding the industry. So the fans are pretty much now your bank. Also a perpetual treasury, staking, allowing token holders to stake their Get token for additional returns, custom NFT tickets. With the integrator dashboard coming, ticket providers will have it much easier to customize each ticket NFT with different metadata, creating scarcity and demand for the tickets long after the event has passed. Also fan engagement. Artists will get more tools to use their NFT tickets for community building and fan engagement. Think of NFT tickets giving access to special community places, or even being used for governance where fans can vote on what they want for future shows. Also NFT trading royalties, a tool for artists to capture additional revenue based on the trading of the NFT tickets, and also branded marketplaces. So in short, the Get protocol will focus on increasing the value of their issued NFTs by adding various use cases and further growing the protocol into maturity. Consequently, increasing the value of the issued NFTs and growing the protocol would furthermore lead to the increased use case and value of the Get protocol token. So another use case for this is actually tickets as collectibles. This is pretty interesting. So imagine having the ticket of a band performed at a specific stadium in, the 1980s, 1960s, and at a concert then. And then these tickets could now actually sell well above their initial price as a collectible or status symbol. So this is also kind of another interesting use case for the Git protocol. So next, I want to do a price comparison and compare the price to other market caps of companies that are in the ticketing industry. So you might be able to gauge where you think the price can go. Of course, let me know in the comment section down below. Let's get into this. So right here, when this article was written, the Git protocol had a market cap of 49 million and Git's price was $2.10. Now, right now, the Git protocol is ranked at the 726th spot with a total market cap right now as of 25 million, and it has a price right now of $2.20. So you got to keep that in mind as we keep reading further. So if we take a look at the CTS Corporation, which has a $1.14 billion market cap, that would put the price of Git to actually $48.99, or a projected growth of 23x. Absolutely insane if you think about how undervalued this project could be in the ticketing space. This could actually disrupt the entire ticketing space when you really think of it. Next, if we take a look at Synmark Holdings, they have a market cap of $2 billion. That would put the potential price of Git to $89, or an upside of 42x. And then AMC Entertainment Holdings, $9.18 billion. That would put it at the price of $393. Live Nation Entertainment, $26 billion, or a potential price of $1,128, or an upside of 537x. Absolutely crazy when you really think of it. The potential price that Git could have. Let me know what you guys have to think in the comment section down below. I'm extremely bullish on Git. So right now you can actually only buy Git on a couple of selected markets. You can't really buy it on Coinbase, and it's not really listed on any popular exchange. So let's go over that. So right now you could actually get Git on Uniswap, but you would have to swap it with wrapped ETH, or you could also trade it with USDT, but this would have to be on Bitrex. And on Uniswap and SushiSwap, you actually have to trade it with wrapped ETH in order to get Git. So yeah, right now it's really not listed on a lot of places, and this is actually another reason why I'm bullish on Git, because once it's listed on more exchanges, then a lot more people can actually buy it. A lot of people are not really willing to go onto Uniswap or SushiSwap and then be able to trade, and swap, and it's really just a big process, and it's mostly a hassle for most people that actually want to be trading it. So yeah, that's another reason. And also, I want to just mention this: if you guys are interested in signing up to HODLNOT and receiving around a 13.86 APY on a stablecoin such as UST, or around a 9 to 10% APY on stablecoins such as USDT or USDC, then sign up in the link in the description below, and you guys will receive a free $30 worth of USDC when you do and sign up. Thank you guys so much for watching this video, and I'll see you guys in the next one.